and welcome back to the Friday 5. It has been quite a few weeks since I have shot one of these videos, so I'm going to start this week's episode off first by telling you what I've been up to for the last couple weeks and why you haven't seen me. Then we're going to jump into rates. Then we're going to talk a little bit about some first-time homebuyer assistance programs. Next, we're going to talk about rate points relationship and how you can best utilize those for minimum monthly payment, and then the quote of the week. So let's jump right in. As I said, I haven't been around for a couple weeks, so yeah, let me fill you in. Early February, I was in Dallas for a couple days for a Loan Depot company leadership summit, which was a great time. Great to hear from our senior leadership and great to see a lot of the technology things, especially AI stuff, that is getting rolled out right now. Super exciting and also kind of scary with some of this AI stuff. But a lot of cool stuff coming down the pike or rolling out right now here at Loan Depot. Then came home, was home for a couple days, and left for 10 days on a trip with my wife and a group from our church. We went to Quito, Ecuador, and a couple surrounding towns. We did some work projects there at a Christian retreat center in a town called Lida. We did some youth camps. We did a kids camp. We helped with my wife helped with a ladies camp. So it's a great time, great opportunity to serve, to see another country, to experience a different culture. Finally back and getting back into the swing of things after kind of being off the grid for 10 days. So let's talk about what's going on with mortgage rates. So again, these are national averages from Mortgage News Daily. VA 30-year fixed, 5.65%. FHA 30-year fixed, 5.64%. Conventional 30-year fixed, 6%, right on the nose. Conventional 15-year fixed, 5.61%. And then conventional 7-year ARM, 5.38%. So these technically are rates from yesterday, Thursday. I'm shooting this Friday morning, and the averages for today have not come out, but we're actually going to be slightly better. So I bet that 30-year fixed is going to have a 5 handle on the beginning of it when it comes out today. It's been nice to see that slow decline with rates, and now's a great time for some people who've bought over the last couple years to maybe look at a refi. And if you are considering buying, if you're thinking, I'm going to wait till rates go down, I don't know what you've missed. We've gone down, I don't know, anyway, at least 1%. And depending on the timeline you look back, we might be close to 2% better than we were in the past. So, love where rates are. We'd love to see them continue to decline, but time will tell. Number 3, there's a lot of buzz on social media about first-time homebuyer grant programs. I had a customer of mine ask me about some assistance programs, and I want to provide a little bit of basic framework because it's impossible to cover all of the different options that exist, nor do I know all the options that exist because they aren't all local to my area in Pennsylvania. So first, there's 2 different types of first-time homebuyer assistance programs. You have true grants, where it's actually free money that you get at closing that has no ties. And then the second option is down payment assistance, second mortgages. Some of those may be forgiven if you own the home and have that mortgage for a certain time period. Some have to be repaid. There's a lot of different assistance programs. There are some through local municipalities. You have others through county, state, federal agencies, and then you also even have some local nonprofits within the area that give out grant or assistance funds. Most of them have some type of income limit, and a lot of times they also have a minimum credit score requirement. And not every first-time home buyer is eligible for them because of those factors. If your income is well over HUD median, there's a decent chance that you're not eligible. And if your credit scores are too low, sometimes you're not eligible as well. And then sometimes there's even asset restrictions. If you have too much in saved assets, you may not be eligible as well. So just because you're a first-time home buyer doesn't mean you're eligible. And also, even if you are eligible, there could be drawbacks to using that assistance program that you need to be aware of that may make you decide, nah, I'm not going to use it even though I'm eligible. Lastly, this is another instance where working with a local lender matters. A cubicle jockey working in a sweatshop in Detroit is not going to be aware of a $10,000 grant program that Northampton County in Pennsylvania offers. So most of the time, your national call center originators, they're not going to be aware of these programs that exist. It's best if you work with someone local. They'll be able to fill you in. Big picture, make sure you're working with a lender who's knowledgeable about these products and is willing to take the time to go through them with you, make you aware of what you're eligible for, and make you aware of like any drawbacks that they may have so you can make the best decision for your mortgage. Number 4, let's talk about the rate and points relationship. So first, I want to start with some basics. With most mortgage products, there's typically a number of different interest rates available on any given day. There's a base rate, and then there's also options with points. Now, points are really just an extra fee that you pay at closing to get a better rate for the life of the loan. 1 point equals 1% of the loan amount. So if you're borrowing $300,000, 1 point, $3,000. Now here's where the nuance comes in. If you're really focused on your monthly payment, oftentimes if you borrow just a little bit more, but you pay a point to get a better rate than you would have with no points, that'll yield a lower payment than the alternative. So here's a quick example I'll run through with you. Let's take today's conventional 30-year fixed rate from Mortgage News Daily at 6% and assume that loan amount at $300,000. The monthly mortgage payment for principal and interest based on $300,000 at 6% on a 30-year is $1,798.65 a month. Now let's look at an option with 1 point, but push the loan amount up to $303,000, and that pushes the rate down to 5.75 because you're paying a point, although the cash to close is pretty similar because we pushed the loan amount up a little bit. The monthly mortgage payment at 5.75 for 30 years is $1,768.23 a month. All right, let's go one step further and let's pay 2 points, but borrow $306 now. So that pushes the rate down to 5.5. At $306, payment is $1,737.43 a month. All three of these options, as I said, are going to have very similar cash to close, but obviously the payment fluctuates depending on which option you go with. Doesn't mean that everyone should pay points though, because there's other factors that come into play, but you should at least can look at the options and consider them. Lastly, number 5, quote of the week from Dan Allender, and this is one of my favorite all-time quotes. He says, "Find like-hearted kings living in the same direction. Sign treaties. When they're at war, you're at war." And I just love this. There's that saying that, you become kind of the 3 to 5 people that you spend the most amount of time with. And I just love this about finding people that are moving in the same direction as you, and then you guys link arms, and when they're at war, you're at war, and you just support each other. So love that quote from Dan Allender. Thank you for watching. I hope you have a great weekend. If I can help you in any way, please reach out.